On behalf of the most reputed law college in the country, that is our Dayanand Law College, I would like to welcome all of you in today's national webinar on securities market, current scenario, and future trends. Respected madam, teachers, honorable guests, and my dear friends, many of you knows me very well because I am also a student of this college. But still, for those who don't know me, uh, I would like to give my brief introduction. Kindness is a language. A deaf can hear, a blind can see, and kindness is the meaning of my name. Dear all, my name is Altaf Kazi. I'm studying in LLB final year in this college. And today I'm very glad and thankful, especially to our respected principal madam and college for giving me this opportunity to become an anchor for today's national webinar. That's all about me and my college. Now, without wasting much time, I would like to invite our respected Dr. Nathani Madam to welcome our today's special guest, respected Professor Dr. Inamdar Sir. Over to you, Madam.
Thank you, Altaf. You are not only the anchor of this program, actually, you are the coordinator because you have taken only the efforts to arrange this program and you have invited the resource person. Actually, we are very thankful to you. So, respected our today's resource person, Dr. Miraj Inamdar sir from NISM Institute, Mumbai. Dear colleagues, my teachers, and beloved students, I'm extremely glad to welcome one and all to today's webinar on securities markets. On behalf of Dayanand Education Societies, Dayanand College of Law, I welcome one and all to today's webinar. I'm very grateful to sir for readily accepting our invitation and consenting us to interact with our students and taking time to join today's program at virtual platform. Actually, we would have invited the sir physically in college, but due to this lockdown and sir is in Mumbai, at least because of this virtual platform, we could call him and we are fortunate enough to hear him and getting this opportunity to listen him because I know sir is an excellent teacher who is constantly working towards connecting young minds to strive towards success and achievement. I am very thankful to you, sir, for taking out the time to uh, consenting and to sharing this platform and expertise knowledge with our students. Thank you very much. And about education society, I want to tell just now only sir was telling me, sir, madam, your Dayanand Education Society, it is most reputed education societies in the Marathwada region. Yes, sir, of course, we are very proud and we feel proud to say that it is pioneering education societies in Marathwada region. Ever since its establishment from 1961, the society has grown from strength to strength by establishing the colleges of science, commerce, arts, law, pharmacy, architecture, interior designing, rendering the human services to the educational needs of the youth in the backward region of Latur. Sir, our college is the only law college in the Latur city affiliated to SRTM University Nanded, and it is a premier institution imparting legal education at research center approved by the SRTM University. And we always try to concentrate in providing the quality education. So, sir, once again, I welcome you at our institution. And whenever we get the chance, of course, we'll be having the more and more collaborations and interactions, but we'll try to call you physically in college. That is more fruitful, sir. But we hope that we will be having more engaging and enriching session ahead. Once again, I welcome you, sir. Over.
Thank you. Thank you very much, Principal Madam, for your kind words. Now, moving further, before I hand over to our honorable guest, I would like to give a brief introduction about Dr. Mehraj Inamdar sir. Dr. Mehraj Inamdar sir is now a faculty member at NISM, but prior to NISM, He has worked for Indian Institute of Capital Market, Institute of Cost and Accountants of India chapters, and IIT Bombay also. He has 11 years of experience in teachings and research and 2 years of corporate experience. He has done MCOM, MBA in finance, CWA, and PhD in the fields of ESG investment from the University of Mumbai. Dr. Inamdar sir has several publications in Index Journal and has won two Best Research Paper awards in international conferences. Dr. Inamdar sir has also conducted various programs for international delegates as well as training program for SEBI, RBI, IRS officers, IAS officers, and various market intermediaries. At, at NISM, Dr. Inamdar sir teaches quantitative methods, statistics, derivative option trading, strategies through trading simulator and teaching technical analysis. Today, we are very eager to hear from you, sir. With this very famous statement from Benjamin Franklin, an investment in knowledge pays the best interest. I would like to invite you to share your valuable experience with us, and let us also get benefited from your experiences. Over to you, Dr. Inamdar, sir.
Thank you, Altaf, for nice introduction. Am I audible now? Am I audible?
Yes, sir, you are audible.
Okay, thanks. So first of all, thank you for Dayanand College for giving me opportunity. Dayanand College is itself a brand for all of us in Maharashtra as well as a national level. So, and also I would like to thanks to Dr. Nathani for giving me this opportunity to interact with the faculties and as well as the students. So, good morning, all of you, and respected teachers, students. Hope you are doing well and healthy, even during this pandemic time. Hopefully, we are at the end of this pandemic time. So today the topic is securities market, current trends and future scenario. So as you aware about the last 2 weeks, what's happening in the market, especially a securities market. If I am talking to security market, especially the market where we purchase and sell the securities, we transfer the securities in secondary market. And what is the securities here? The securities are the equity, or we generally call it as shares or stocks. It's also a bond, which we call as fixed income. And also we have currency, commodity. So these are generally we call the securities. And when we are doing the purchase and sale in the market that we call the securities market. And this market is last 2 week we are seeing the lots of happen in this market. First thing is that uh, are you able to see my screen?
Yes, sir.
Yes, sir.
Your screen is visible.
Yes, sir. So see, so last 2 week, what we have seen, the market corrected. Then some stock have give very extraordinary returns. Some stocks were fell off. We have also seen this Barsi scam, and also SEBI come out with the various stringent action against those who are the manipulator or scam makers. So in today's webinar, what we are going to discuss is about the broad perspective of the market, broad perspective of the securities market. What exactly, especially what happening after the post-pandemic. We are not going to a much earlier history, but especially the post-pandemic. And then we will see that uh, what is the reason for this crash, and what can be a future opportunity in the market, as well as we see that this market is now in a transition phase. Lots of new things coming to the market, and how it can be impacting this whole capital market. So this broad on this three parameter we will discuss first, and then we will come toward the investor perspective. Investors are the many kind in the market. Some are the big, we will call it a financial institutional investor, FIIs. domestic institutional investor DIIs or high net worth individual HNIs. But we will talk about the retail investor, those who are investing almost near about the 2 lakh rupees in the market. So we will do that. So let's start here. So post pandemic, what we have seen, the market has almost doubled. On 23rd March, market has reached almost its all-time low. 7,000 it has touched, and then from that level, now the market is almost at 17,000, especially in Nifty. I'm talking about. So it's a more than double. And if you see the previous crashes or previous correction in the market, especially financial crisis of 2008, there also we have seen the market has corrected from 5,000 point, especially Nifty, towards 2,500, the bottom at that time in January 2008. But the one interesting thing is that after each crisis, market has recovered very fastly. Especially in the financial crisis after 2008, uh, uh, post financial crisis of 2008, after 5 years, market has almost tripled from 2,500. So before COVID, it was 13,000, 14,000. So almost threefold, fourfold we have seen, and that the thing here in Nifty post COVID also we have seen that. But the one difference between this post financial crisis of 2008 and this COVID crisis is that in 2008 our market was corrected, but our GDP was not crashed at that time. The GDP was was affected, but not very drastically, which happened in this COVID situation. Our GDP almost touch say negative territory. The growth rate is also negative territory. So that was the difference between 2007 and 2000 this 2020. And second difference is was that the recovery post 2008, the recovery in the market especially was very slow. For reaching to 2,500 to almost 2,000, 14,000 of the Nifty, it took almost 6 7 years to reach that time. But post pandemic here, we have seen in just a 3 4 month market, I mean, rebound to its earlier level. So that is was a very interesting thing. And so generally, how much market gives a return? Nifty generally gives a 7 to 12% return averagely, and that is the one of the reason that people are very much attracted to towards this market, because as compared to fixed deposit, it's almost a double return you are getting in the market. But as compared to the this fixed income securities or fixed deposit, here the risk is also as correlated with the return. So this thing is happening about the market and its movement. Next thing which we have observed post COVID scenario in the market is the number of IPOs which are coming towards the market. IPOs is generally initial public offering. When the company want to raise the fund, they come towards the public and they raise the fund. First, they take the permission. They make their proposal from by through the route of the merchant bankers, and then they take the permission of the Security Exchange Board of India, and through the exchanges they float their IPO. And post COVID, there were 63 new IPO we have seen. And among this, and a very interesting thing about this IPO is that all of the IPOs were oversubscribed. Means if they are coming out of, if they want to collect 100 rupees, the offering was so many people are offering that we will give you 100. For example, I am saying 100 rupees. So this is a oversubscribed. All of the IPOs were oversubscribed. But the thing is that oversubscription is not the criteria that this IPO is getting the successful. If you see that at the time of listing, means after the subscription, when they are facing the secondary market and their shares are getting listed in the secondary market, only 46 IPOs are gaining and 17 loses on listing days. Post of the listing day is a different story, but on the day of the listing, because see, when the shares are coming towards the market, so many people are valuing it, and when they are facing the public, then their real value is getting decided because of the market forces. So 46 is gaining. So here what I want to say that for the investor, don't get carried away by that this IPO is oversubscribed and that this is a very big one and that one. So you read their proposal, you read their red herring prospectus, you analyze them, or if you don't have expertise to analyze this thing, so do consult the financial advisor, register those who are registered with the SEBI, and take a consultation whether you can invest in this IPO or not. Or if you are not understanding that IPO in their initial public offering, so let them come towards the market and let them test the market, and then you decide whether it's a good IPO or not. Because we what we have seen in earlier IPOs also, uh, some IPOs after even after opening in the market, and they are gaining a good return in a first 1 month, and then those people enter after a 1 month also, they then they have got a good return as well. Okay, so give a time to the market, or give a good study towards this IPO, whether to invest in that or not. And why I'm saying that, because see, or India's biggest IPO is going to come in coming month. LIC IPO is coming. Uh, so before investing that, you must study whether it is good to invest in the IPO, or whether it is good to invest in the.
आवाज नहीं आ रहा है सर.
Sir, your phone mic, your sir, your phone is muted. Microphone is muted.
Now are you able to hear me?
Yes, now
Uh,
you're.
so this is about the IPO. Now the next big thing is happening in the market post COVID is the mutual funds. See, earlier the mutual funds, what is generally a mutual fund? So mutual fund, uh, if suppose I don't know much about the market, so what I will do, I will give my money to some expert people and asking them to invest as per your expertise in that shares, because there are the 5,000 listed companies. So which where to invest my money is a big thing, and lots of study need to be done there. So I will give money to the some expert, and they will charge me some commission, and then they will invest into the market. So this is a general basic framework of the mutual funds. So what we have seen in mutual fund industry, the manifold rise in the new investor to through the mutual fund channel. So see, whether you are investing directly or indirectly or through the mutual fund route, your money is going towards the that stocks. And what we have seen in mutual fund, that in early 2010 and 2012, the mutual fund was very much famous in tier 1 cities, big cities. People used to take SIPs, people used to invest in that. And earlier the commission was also very high. But nowadays, what new thing we have observed, that the tier 2 cities and tier 3 cities is also very much showing interest towards the mutual funds. And the mutual fund is also a good product for those who don't have a time or don't have a expertise for investing into the market. and especially the systematic investment plan is the most famous one among the various thematic, because there are more than 2000 scheme, different kind of the scheme, multi-bagger scheme, mid cap scheme, small cap schemes, IT scheme, real estate schemes. They are collecting as per that themes and investing those company which are related to that themes. So so in mutual fund, we have seen that 9.74 crores new mutual fund folios has been started. Means new those persons. Suppose after post COVID, I am investing in SIP, and I invested in a two or three different scheme. So that scheme I'm counting here, and this is the number. It's a 9.74 crore new mutual fund folios. So it is giving you an insight that the awareness and penetration of mutual fund companies and mutual fund is very much nowadays. And especially SEBI has also capped the commission of the mutual fund companies in mutual fund distributor as well. So the commission also has been decreased so that the returns perspective also has is increase here. Okay, so that's a big thing is happening in the market, and a very interesting thing which we most of you also are connected with this one, that new investor joining the market. So how we count that how much a new investor has joined as per the demat account holders. So demat is a dematerialized account. Those who want, so as per the regulatory requirement, you cannot keep your share physically. The days of the physical certificate are not gone. You need to keep your shares only in form of the electronic form. So NSDL and CDSL, these two companies generally maintain this demat account. So as per that, 3 crores new investor has joined the market. This is a very interesting, and also very I will say the cautious thing for the institutions like us, and institutions like the institutions or regulators to strengthen the financial literacy, or strengthen the investors to create the awareness among the investors about the market, how much risky it is, or how much where you can reduce your risk, and how you can do the planning of the wealth management. And I appreciate the NN College to organize this kind of the workshop at the very right time. If you see the demat account holders post pandemic in 2020, every month near about 5 lakhs new account were opening. But what we have seen in October, November, and December of 2021, uh, 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 2021, we have seen that 25 lakhs per month new account is opening. So so it's a challenge also to means do the financial literacy at the very grand level to literate them, this new investor, about the market, about to avoid the various scam. What we have seen in Bashi, the most of the people are not aware, means whom to give the money, what is the role of financial advisor, whether he should be registered with the SEBI or not, how to check that, how to raise their queries, so that raise their complaint especially. So this all thing is need to be make aware about this new investor, or new investor need to get this kind of the training. So so these are the rosy picture about the market, but the recent some worries also we have. We have some worries related to the inflation. Inflation is 5-month high. Uh, so it's 5.59% right now. But as far as the inflation is concerned, in inflation, still we are less than the USA inflation, which is near about 7%. And our inflation is a tolerable limit of the RBI, which is generally considered as a 2% to 6%. But still, it is a concern. And especially we are more concerned about the US inflation, because see, when you if there is a high inflation, so Federal Reserve of their USA RBI we call, so Federal Reserve Bank generally raise their interest rate. And when they raise their interest rate, so big investor like FIIs means withdraw their money from the emerging market, and they keep their money in the fixed deposit. Because see here, even though it is a high return they are getting in emerging market like India and China, but it is also have a high risk. But in FDs or the fixed deposit, they have a low return but low risk also. So that money can, so it's a so the last 1 week what we are seeing that FII is heavily withdrawing that money from the market and keeping in the US market. Second worry, we have this crude oil price. For emerging economy, the energy consumption is always a priority, and their energy consumption are always high as compared to other countries. And this the crude oil price, Brent crude oil in the OPEC market has almost touched $90 per barrel. They are highest since 2014. And see, if you have a expenditure, means if government do the expenditure towards the purchasing the crude oil, so definitely their fiscal deficit increases. And when their fiscal deficit increases, so government can't announce a much big expenditure project, because the fiscal deficit is very much important to strengthen our currency, to strengthen our credit score of our country. So that all are concerned towards this crude oil prices jump. Okay. Next, it's not a worry, but also related to GDP growth. IMF predicted the GDP growth will be a 9%, and government say that GDP will be a 9.5%. But if you compare with the global GDP growth rate, it is a 3.8%, and we are the fastest growing country in terms of the GDP. Fastest, I will say, second fastest. Now the Bangladesh is leading in the fastest GDP growth rate. But here also how much we can able to transform this towards the various other parameters is a different discussion. So I'm not going into that. Next thing is that the market volatility. uh, we have seen the market in a zigzag movement, and there's a very much behavior of the market. Market can't go in a linear direction. Market, whenever it touch a higher point, so those who have invested earlier, they generally book their profit, they exited from their position, and so the market generally crash, and then after market pull up, and then take a new trajectory. So that we have seen now. And this market volatility also due to some geopolitical tension which we have seen in Ukraine. The one side there is Russia, Iran, China, and other side is the UK, USA, and other European countries. And this tension is every day is rising. That is a big concern to India also, because if this is happening, so or various energy import is coming from this country, especially natural gas and also crude prices, crude oil. So that is also some worries we are having, but these are all are the short-term worries. But if you see the long-term picture of the our economy or our market, the Goldman Sachs, which is a very reputed investment firm in the world, what he forecasts 2 months back about the Indian economy. They are saying that yes, Indian economy is going to touch 5 trillion economy, and it is going to become a fifth largest economy of the world in the coming 3 years. Our government saying 1 or 2 years, but the Goldman Sachs says at least 3 years it's need to touch that, and we are going to surpassing the UK in terms of the trillion economy. Now coming toward the new IPO, we have created a good atmosphere for the startups companies, good atmosphere for the raising the fund, and we expect that the more company will come to the market and they will raise the fund for their new ventures. Will may uh, open up new opportunity for the investment, new opportunity for the employment, and other thing as well. And one of the other crucial factor relating to which contributing this economic growth is the our digital economy. So almost 80 crore internet user we are having, which is the second largest in the world, and our cost of using the internet is the cheapest in the world. So that is very much push for the users to become a part of this digital economy. We have seen also earlier we don't use much of the online payment, but most of us are now are using the online payment mode, and which is giving a route for the new ventures, new innovations, and also speeding up the various process, reducing the various gaps in the administrative process. So that is a good sign for the long term perspective of the our country. Next one is we are the youngest country. The people who are between age gap between the 20 to 45 years, uh, as far as the youngest country is concerned, in world we are the youngest country, and uh, China, which now is facing this problem of demographic dividend because of their one-child policy, even though they have said that a two-child policy, but this is now the aging population is increasing. In terms of economy, the aging population is a liability because they are not very productive. So and that is one worry and big challenge for the China, which we don't have for the coming 25, 30 years at least. Okay, so these are the some good thing about. Let's talk about some very interesting upcoming trend in the market. So upcoming trend is starting, especially ESG. I don't know how many of you are listening to this concept. For last 1.5 year, this concept is very much popularized in India, especially. So what is this ESG? ESG is especially environment, social, and corporate governance. See, if earlier generally when company or investors, big investor want to invest in the company, what they used to see the balance sheet, they used to see their performance, how much profit they are generating, how much growth they are generating. But what we have seen from so many examples, even your balance sheet are very good, but if you are not caring about the society, about the employment, about the employees, about the your suppliers, if you are not caring about the ethics, corporate governance, if you are not caring about the environment, it will be a very much threat for your sustainable business. You may be vanish after some times in the market, especially about the business. So we have seen, for example, we have seen in a environment, some Adani port have violated some creed in Gujarat port. So National Green Tribunal have penalized very heavily, and then after their share price was crashed in 2015. And we have seen also in a Lavasa, Hindustan Construction Company was invested very much in the Lavasa, but Green Tribunal say that, and court also said that is a violation of the environment. So then, after those who have invested in that companies, their shares used to be a 56 rupees, now they are trading at 5 rupees. So this is the environment risk the companies are having. Social also we have seen in a Maruti case in somewhere back. There was a protest between the employees and the employers related to the wages, different wages, and due to which for several weeks the Maruti production was hampered, due to which this impacted towards their production. In corporate governance, we have a very big example of Satyam. Uh, if they are doing a not doing their business ethically, or they are not very strong towards this corporate governance, then whatever the growth or whatever figure you are saying is not trusted one. So nowadays, what the big investors saying that we will see definitely the balance sheet, but we will also see the E, S, and G kind of the variable as well, and then only we will invest. And after this various United Nation um uh, United Nation asking for the countries to do towards the sustainability, do towards the environment, ask your corporates or to your business to be very sensitive towards the environment, towards social aspects. So new rules are coming. So SEBI has introduced this business responsibility reporting, asking 500 companies earlier to disclose their how they are dealing with their employees, their sex ratio, or about their how much salary or discrimination, rather any discrimination in a salary are there, how many women's director are there, how many different able people you are incorporating in your organization, what you are doing in your society, how you are using your CSR fund, what is the impact of your CSR fund, what is your corporate governance. So various things they are asking in to toward the market. And last year also SEBI has come out with another big regulations and saying that now they need to disclose more thing, because see, if the disclosure is happening only if the investor can know about the company. So this is the role of the regulator to ask the disclosure. So now company is disclosing in terms of the business responsibility and sustainability reporting. So in that terms they are asking the thing. And what's happening if I am a small investor, so whether it is much impacting too much? Yes, because see, apart from yes, social and corporate governance, empirical says research says that environment also a big environment also having a big impact on the performance of the companies in coming future. Because see, environment risk, what we are seeing, the signals of this climate change and the impact of this climate change every day is becoming louder. And this signals is not only becoming louder but becoming more frequent as well. A very surprising news of snowing in the desert, or earthquake under the sea, or rising of the sea level, it's coming. So and it's sooner or later it may impact to the companies as well. It is an opportunity as well as also a threat. Opportunity in the sense, companies those who are launching the electric vehicles, so their shares you are seeing it's performing well. So and another thing that in global front, United Nations asking a big investor, especially FIIs, to place that you will invest only those companies who are doing good towards this ESG. So what happening? Those companies are already doing, or now starting doing towards good towards the ESG front. They are receiving a good money and their share prices is increasing. So that's why if you see, the MSCI World Leader Index has risen 22% as compared to the general index, which is giving 15% return. So general world index giving 15% return, and ESG index giving 22% return. And India also, we have seen almost now we have 12 mutual fund schemes, those who are only dealing with the ESG front. So you and me also can invest in that if you're more concerned about the ESG front. Uh, okay, so this is a big thing is happening in the market in coming, I mean, from the last 1.5 year. Next thing is the ETF. This is a equity. The ETF is a equity traded fund. So generally, see, when you invest in the mutual fund, SEBI said that you should compare your performance with the benchmark. Suppose your scheme is IT scheme, and that mutual fund is investing only in 5 companies of IT. Then it is asking that you compare your performance with the IT index, means all the how the all the IT companies are performing. If your mutual fund is going doing good as compared to the market, then you are, it is called the beating the benchmark, or you are performing well. If you are not able to beat the benchmark, means you are performing less. So one of the research says that 70% of the scheme have not uh, beat their benchmark. Means they have not even a return more than their benchmark. So what's happening because of that? So one question arises: why to invest in the schemes, a special thematic scheme? Why not to invest in directly toward the equity traded fund, or directly to the benchmark? Suppose if I will invest directly toward the Nifty 50 companies. So Nifty 50 index is the group of the 50 companies. Every companies have the different weightage as per their market cap. So as per that weighted, invest my 1,000 or 50,000, 1 lakh rupees in that 50 companies. So as Nifty increases, so I will get the returns. And another big advantage in ETF is that there is no mutual fund manager, or there is no much expenditure involved in that, because you are directly investing into the index companies. So because of the low cost and low cost and that easy visibility, so now people are more interested toward the ETF fund, and this growth is almost 70%. And one more interesting thing, especially in tier 2 and tier 3 cities happening, is that earlier, see, we have also a gold ETF. If you want to purchase a physical ETF, then physical gold, you need to purchase at least 10 gram, 5 grams of the gold. But through the gold ETF, even by through the SIP of 1,000 rupees, you can start to invest in the gold ETF. And the prices of gold ETFs is correlated with the real market gold prices. Okay, so the advantage is that you no need to store your no need to worry about the storage of the gold, or risk of theft or making charges and different things, because here you are purchasing only unit of that gold. And if you suppose after 10 years you want to withdraw the money, so that gold price, that unit multiply by that current gold prices will be your return in that investment. So that's happening in the tier 2 and tier 3 city. Next thing is the discount brokers. I think most of you have heard about this concept of the zero, the up stocks. These company are called the discount broker because they are charging very less brokerage as compared to the traditional brokers like angel broking firm or share khan. So what this discount broker and traditional broker main difference is that discount broker doesn't provide you any research input, means where to invest, which stock to invest, when to exit. They don't provide that, but traditional brokers used to provide that. And this is thing happening, and they are coming with so many new tools, means how to analyze the company, how to do technical analysis, fundamental analysis, what are the various indicators are saying. So this thing is happening with the discount broker, and they are gaining much of the chunk of thing. And another one is algo trading. Algo is generally through the machines or through the computer. If you are trading, automated trading, I will say. So this automated trading now account for almost a 50-60% of the market. Means all the trading which you are seeing now, almost a 50-60% is through the computerized trading. But for the long-term investor, this algo trading doesn't much affected, because this algo trading only for those who are the traders, maybe it is a concern for them. So this is upcoming trend, but now I will take only 10 minutes more. So now we will discuss. Okay, the market is good. There are some worries. There are some future perspective of the market. But what about yeah? Anybody want to ask anything? If you have any question, you can write me in the chat box, so that. Hello.
Sir, we'll take
Am I audible?
Q&A session after finishing your lecture, sir, for 10 minutes. You please continue, sir.
Okay, fine. So let me finish this 2-3 slides. which is very much important. Now we are talking about as a retail investor, uh, as a small investor, what is, yeah. So as a small investor, what can I do in the market? So see, this is the chart means where these new investors are coming, especially. So if are you able to see my screen? I think it is stuck.
Yes, sir. Yes, sir. Screen is visible.
Now it is coming. Huh. Okay. So see, when the market crash, generally only those who are very veteran, very experienced people, those who are investing in the market almost for 10, 20 years, they have a daring to invest in that means in crash market. So in discovery phase, generally we get the smart money from the smart buyers. Then after those who are less experienced, like 4 5 years, they see that yes, market is recovering now. Now we can invest in the market, and they put their money in the market. And then come is the blow off period, especially those who are cursing the market, especially those saying that this market is like a gambling and that we should not. But when they are seeing the other, his friend is making money, then he's also jumping into the market because of fear of missing out, FOMO, which is called. Because of FOMOs, the most of the investor, what we have seen in the last 6 months, we have seen 2 crores of new investors join and they push up this market very much high. And then after we see that some correction is happening. So this is the phase after every recovery, we will find this kind of the bull market phase. But see, what I want to share here that the in coming towards the market is the very fourth phase of your wealth management. And see why you are coming to the market, because you want to make good money, you want to make wealth, which wealth you will meet up your goals. From that wealth you should be financially very sound, and you should must have financial security. So that's why you come to the market and want to make a good money out of it. But see, making coming toward the market, I will say that this is the fourth phase. But before that, you need to do a lots of homework. What are this homework? The first homework is that you must have a life insurance, at least term insurance policy. You must have, see, if even a 50 lakh rupees, hardly 3 400 per month you need to pay. If the person is depend on you, you must have the life insurance policy. And one caution here, that life insurance is not for the investment. So don't treat a life insurance as an investment product. So life insurance, you should take a term insurance policy. Next thing is that medical insurance. What pandemic has proved that medical expenditure can be a lot of stress towards your wealth. So if the people are depend on you, you must have the medical insurance. And third thing, you must have the 6 month emergency fund. In 6 months, how much you are earning, multiply by 6. That money you must keep aside in a different account. It's not for the fixed deposit, it's not for anything. This money you must keep. Uh, are you able to hear me?
Yes, sir. Your voice is audible.
त्यांचं माईक
Hello.
ऑन झालं, प्लीज म्यूट करा.
Hello. Sir, now you are not audible.
मध्ये ज्यांचं स्पीकर ऑन व्हायलाय त्यामुळं डिस्टर्ब होत असेल सरांना.
कोणाचा स्पीकर ऑन आहे?
आताच कोण राहिलं होतं म्हणून सरांनी पूर्ण बंद केलं.
Altaf, we will request them again to join the meeting.
Wait a minute, madam. I'm calling him.
All students are requested to please stay back. Sir will be joining back to us.
मैडम गेस्ट के लिए कोई टाइम लिमिट है क्या मैडम? वापस सर ज्वाइन नहीं कर पा रहे हैं.
अच्छा सर, ओके सर, सम अप करेंगे ना, और क्वेश्चंस अगर किसको है तो फिर वो उनको आंसर्स करेंगे.
टीम के लिए कोई ज्वाइनिंग टाइम लिमिट तो नहीं है सर? आप ज्वाइन
लिमिट नहीं है ऐसा कुछ, लेकिन अगर ज्वाइन करते हैं सर तो थोड़ा सबके क्वेश्चंस का आंसर दे सकेंगे सर.
मैडम सर वापस ज्वाइन नहीं कर पा रहे हैं, वो टाइम लिमिट कुछ खत्म हो गया है, ऐसा कुछ मैसेज आ रहा है.
ओके नहीं, अब एक बार ठीक है, हम एक बार वापस लिंक भेजते हैं सर को. वेट. हाँ. Kazi, we have forwarded one link to you. Please forward it to the sir.
Okay, madam.
Am I audible now?
Yes, sir.
Sorry for
the
disruption. Yeah, no, my fault. Because see, this technology is bring some facility and also have some constraint. Let me share. So I only a few slides left. Yeah, a few slides left. So I was talking about the various phases before coming to the market. First is you must have the life insurance. Second is you must have the medical insurance. And third is you must have the emergency fund, at least 6 month emergency fund. Whatever you are earning, multiply by 6, you must have. It's depend on your job profile. In government job, if you are, then at least 3 month emergency fund you have. Already other people, non-government, they must have the 6 month emergency fund. Next phase is the retirement planning. See, we have seen the inflation, and if the inflation suppose is 5 and 6%, and if your expenditure is 4 lakhs per year, so after 25 years, you at least need 10 times of it. I mean, so 40 lakhs per year your expenditure will be after retirement. So post-retirement planning you must do before coming to the market. Okay, so various retirement scheme fund you can invest, or other product you can invest for the retirement planning. So it is also must needed. And for phase three is that, see, you must create a three different account. First account where your salary is coming, second account where you are doing your saving, and you are saving how much you must save. So thumb rule is that how much is your age. Suppose somebody's age is 30 year, so 30% of their income they must save. So like that, your saving should be. And if your age is increasing, your saving should be increased. And first you save, then you invest, and after investment whatever left, then you do the expenditure. And whatever you are doing in this phase one, phase two, phase three, do a proper filing of it, do a proper documentation of it, and you train your spouse, those who are dependent on you, how to use that. Because if suppose unfortunately something is happened, your spouse doesn't know how to, your wife or your husband doesn't know how to use that life insurance, where is your password of your account and that. So you must do a proper filing of it. Then coming toward the phase of the market, and means whether you invest in the equity market especially, or whether your gold FD, I will suggest that you must diversify your investment, means each and everywhere. Because see, suppose gold and equity market, if you see, there is a negative correlation. If market will go crash, you see that gold price move up, what we have seen in pandemic. So that is a good negative correlation is also very good for the financial management. And so these are the some things. So I'm skipping this slide. And first, when to invest? See, as soon as possible, you invest in you start investing. There are the two cases. One, Tanya is investing at the 20 age of 20, and one Nikki is investing at the 30. For 5,000 money they are investing in the investing. And if you see, especially if you take only a 5% minimum growth rate, so one is the difference between these two are almost 1 lakh rupees. So do investing at. Now various people ask me whether to invest or whether to trade. See, trading is very lateral state. Trading having some risk. Trading need proper education, proper training, proper knowledge of the technical analysis, fundamental analysis. Investing is good. I will suggest those who are the first time investor in the market, start with the simple SIP, systematic investment plan of the mutual funds. Then go with the analyzing the companies, and then go with the trading. So this means reaching out this thing. You always remember this Paul Samuelson is he is a very successful economist. He says that investing should be more like watching a paint dry or watching a grass grow. Means it's a very slow process. You must have the patience. But if you have excitement, want to do the excitement, then better you do the gambling or a casino in Goa, and that, not to come into the market. Okay, so market, if you are a serious investor, want to grow your wealth, you must have a patience, you must have the proper behavior to study the market and do that. And what you must know about the investor protections also. Various BSc, NSC, NISM also run a various financial literacy program. If you go and check their YouTube channels, they have come up with the various kind of the trainings which are the free on their website, on their YouTube channels. AMFI, SEBI, PFRDA, they also have this resource person program. In each of the district, they have allotted one person, those who are conducting the program. I would request your college also, you find out those who are the resource person in your district, and ask them to conduct the program in your college. Means to detail, because this 1 hour I can't cover everything. So about the various projects they should. And if you have any grievances, if you have any complaint about the any product, any market, any intermediaries, so SEBI has started this course. Means you can file your complaint here, and SEBI then route that complaint toward that intermediary. If it is related with the exchange or brokers or any intermediaries or any person who is you are saying he is not doing good towards your investment, you can raise that concern towards this Scores platform. Scores, they have also launched their Google app also, so you can download that, and if you have any complaint, you can raise. And I like the how the Altaf has started by saying Benjamin Franklin this quote that investment in knowledge pays the best interest. So do read the books related to the market. Do lots of paper trading. Do watch insight about the market, and then only decide which company you want to invest and how to grow that. So here I will stop here. And thank you very much again for Dayanand College for giving me this opportunity. Thank you, Dr. Nathani, for giving opportunity to interact with the faculty as well as the audience. I also thanks all the audience to patiently listening to me. Also thanks Mr. Altaf for coordinating wonderfully for this program. That's all from my side. Thank you very much. Over to you, Madam Altaf.
Madam, with your permission, can we take question and answer for 5 minutes?
Yeah, we will take interactive session.
Sir, few students raised their hands. You yourself pick them and ask
No, no, we
allow
will
to ask
Okay.
the questions.
we will invite them. Yes. Students, you can unmute yourself and ask the question one by one. Yes, Pallavi More, Ajit Thomre, you can ask.
Yes, ma'am.
Yes.
Yes, ma'am. Good morning, sir. Good morning, ma'am. Good morning,
Good
all my
morning.
brothers and sisters. So my question is, what are the legal environment important for a security market?
Okay. See, security market, the regulator is Security Exchange Board of India. And what they are issuing is the regulation, notification, and different guidance. But above that, there is a Company Act. So under the ambit of the Company Act, General Security Exchange Board of India, through the different regulations, they control the market. Means their motive is that they must protect the investors, and they also enhance the market. So, like for the corporate governance, they are asking for a listing for LODR, listing for obligation for disclosure requirement, and various for the FUTP regulations they are coming to avoid the various fraud. They are also coming with the various regulation related to the market manipulation to avoid the market manipulation. So, with concern with under the Companies Act, they generally issue various regulations regarding to the securities market.
Thank you, sir.
Yes, Ajit.
Hello.
Yes, Ajay.
Good morning, sir.
Good morning.
Sir, as you said earlier, we can't picture the painting with same brush. My question is that the fundamental investor and technical investor in both concept, the second word is our same, that is investor. So in current scene, the cryptocurrency and Bitcoin playing very major role in economy, and the youth is greatly attracted towards the both factors, that is digital currency related scheme and investment. But still finance ministry unclear about this surety and the role of digital currency in Indian economy. Can you explain why Indian government or Indian economy not able to heartily welcome this new investment trend? Thank you, sir.
Very good question about the investment. So first of all, whether this Bitcoin is an investment or not, this is a big question. Okay, because what is the underlying is not clear. Especially cryptocurrency, Bitcoin is one of the asset name is there. But what you are talking is right, because India is one of the country where you are finding big money is investing in the cryptocurrency, and this is a big worry also for the regulator, because see, for the RBI and that the currency is a tool to control the economy, and if you are losing that control, then and how we can do the control of the inflation and other thing is a big thing. So I think that's why various entities, especially Federal Reserve, also not allowed to list the cryptocurrency ETF. Russia also banned the cryptocurrency. Elon Musk also said that I will not invest in the cryptocurrency. And recent volatility in cryptocurrency is a big concern. 40% crash in the cryptocurrency in last 10 days is also a big worry in the cryptocurrency. Yes, it is a technology which we can't control it, but for economy, I think right now we don't have much stronger regulations for that, and I think what government is doing right to avoid the cryptocurrency, and we have other very less risky investment avenue. So why we are choosing for the cryptocurrency? So that's my concern.
Okay, thank you, sir. Hello, sir.
Huh.
May I audible, sir?
Yeah,
Sir,
yeah.
second question. Demonetization and COVID-19 badly hit the industry and especially young startup. So, do you want to recommend any suggestions for avoid the heat given by the both factors to young startup and investors?
See, c- this demonetization is different than this COVID in terms of their nature. But for the startup, yes, they have given a opportunity for the various startups, especially the startups which are coming toward the fintech, financial technology, the startup which are coming towards the solving the environmental impact kind of the like EV motors and that electronic vehicles that front. So we have ample of opportunities in the startups also, and especially advisory services, also online advisory services. We have seen the SEBI saying that only those who have registered with the SEBI, only those people can do investment advice. So advisory front also, we in tier 3 tier 4 cities also we need the advisor. How many people in your city, those who are giving an investment advice especially? So that is also a very good opportunities coming, and especially I was also talking with the madam related to the securities market scope and the career opportunities, as NISM also collaborated with the National Law University Mumbai, and we are running one program LLM. And here what we have seen, it's just a third year we are entering into this LLM course, and last 2 years we have seen very good placement records, and very good record from very good demand from the market also, because nowadays securities markets law especially getting complicated. Various new investor coming into the market, they need advice, they need the regulations, they need somebody who can interpret for them. So I think it's the best thing to enter into the security laws perspective into the market, and shape up your career. So that's my advice towards your career.
Thank you, sir. Thank you so much.
Uh, with all this, I would like to thank Dr. Inamdar sir for sharing your valuable experience related to security market with us. Definitely, all the participants will get benefited from hearing from you, sir. Sir,
Thank you.
also thank giving. I also thank you for giving your valuable time to address today's webinar in a very short notice, sir. Uh, Thank you, our principal madam, for and our college to giving me permission to organize today's program. Thank you, all of you. Have a great day. Thank you, madam.
Thank you. Thank you.
Thank you.
Sir, from bottom of my heart, the information really it was highly informative. The information which you have given, I'm very thankful to you, sir.
Thank you, madam. Thank you.
Thanks, sir. All students are requested. I will share the feedback form. So you will be getting the e-certificate. I will share at WhatsApp group. So please fill up the form without fill.
So shall I leave, ma'am?
Yeah. Okay.
Okay.
Okay. Thank you, sir.
Thank you. Thank you.